Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade today. I am Agam Vakil filling in for Darshan Mehta. Let's welcome in our experts for the show today. We have Foram Parekh of Indiabulls Ventures and Dharmesh Kant of IndiaNivesh Securities joining us on the show. Good morning to both of you and thanks for taking the time out. Well, on the show we have we are discussing Tata Steel and we're analyzing its quarterly earnings. We're also discussing two pharma companies, Lupin and Cipla, that have reported their numbers during market hours yesterday. We also take a look at Titan and what can be done, especially after the sharp correction and also, well, the cut in terms of the outlook for jewelry sales. And finally, we touch upon housing finance sector and whether or not the sector is out of the woods. Well, let's start the conversation with Tata Steel. We've seen, well, your EBITDA the lowest in 9 quarters. That said, earnings were largely in line with expectations, and yet it is taking a little bit of a knock right now, down as much as 2%. Let's open this up for discussion. Foram, I'll start with you. What's your view on Tata Steel? What's the way forward? How are you looking at this one?
So we like Tata Steel from here. We believe that the numbers are not good and it's as per expectations because the macros were not favorable. The entire steel sector was grappled with the macro headwinds we had in terms of the trade wars between US and China. Also, if we see the entire auto sector was not performing in India and even globally, which did not aid to the volumes and therefore the realizations took a hit. So so that's why we are seeing operationally it did not perform good set of numbers. Right. But of course, because of the corporate tax which has aided the bottom line. So I feel, but going forward, when things are improving, especially in India, we are seeing a good turnaround in the auto sector. Sure. So we feel that volumes will now pick up, and after yesterday the kind of announcement that the FM has done for the realty sector, so I think steel industry will continue to pick up, and many things are now forming in a line for steel companies to increase on their volumes, and that is why I feel that volume growth would now surge from here on. So good time to accumulate or buy, even fresh buying for Tata Steel, I would say.
Okay, so that's the view of our Forum on Tata Steel. She's looking to start accumulating right now, start nibbling into it. Dharmesh, how will you stand on Tata Steel in this one?
Yeah, I would beg to differ from Forum. All right. Because the regions which she cited, like global slowdown, economic slowdown, domestic economic slowdown. Yes. So everywhere there's a slowdown. Even the realizations are, getting less. Yeah. Be it blended, hot rolled, cold rolled. There's no offtake happening at the same pace which it should be happening. I think going forward, the slowdown will persist. If you look at the GST numbers, they are not encouraging. Demand from the market is not there. I mean, domestic steel prices are falling. Sure. And Europe, the Brexit thing is still looming out there. It's not being resolved as of now. Right. So this quarter, the EBITDA was good as far as European business is concerned. But I don't think it can have a carryover effect going forward. Right. So there are too many question marks out there which has to be answered before one can start bottom fishing in any of the metal counters. It's at best a cyclical play as of now, propelled by liquidity pumped throughout the globe. Okay. So I do think, and China is still sitting on 50% kind of ideal capacity as far as steel production is concerned. So the moment you see a demand coming up, there would be the supplies. So steel prices won't go anywhere. Right. So it will be a very difficult situation, and Thyssen has not worked out for Tata Steel as well. So too many problems are there. So best case scenario is you play the cyclicals as a trade. Not an investment bet. Correct. Fair enough. Okay. All right. So we have divergent views coming in for Tata Steel, and of course cyclicality in this case is a point of contention from both our experts. But from there on, we'll move on and talk about the pharmaceutical space. We've had earnings from two very large companies, Lupin and Cipla, announced their results just yesterday. Lupin for now is under pressure, of course. Cipla is also down 1%, but not as much as Lupin. On the whole, Lupin is perhaps under pressure currently is because there's been a little bit of disappointment on the margins front. And as far as Cipla goes, it's been a relatively steady quarter in line with expectations. So Dharmesh, coming back to you, I reckon that you don't really have a view on these counters, but how would you approach some of these large caps then? See, as far as pharmaceutical space is concerned, I think 1 year more to go before any bottoming out will be there. Because the trend of blended realization going down is still there.
Right.
More and more product which were exclusivity for most of our pharma companies are coming out of exclusivity in US, so their competition will increase. I think Lupin had one case in point, Cipla had the other case in point, and Cipla, if you look at the numbers, they are always marked by one-offs. So accounting adjustment and things like this always happen quarter and quarter. So there is no regularity or standard form out there. So that one has to keep in mind. At the same time, domestic pharma, businesses have been, volume growth has been there, but prices are subject to, again, revision, because government is very keen on lowering the prices of most of the drugs. So that NPPA, that authority is just keen on, reducing the prices. So that overhang will still be there. I don't think pharma as a space is out of the woods as yet.
Okay.
Though as a house, we do have a accumulate kind of a rating on Lupin and Cipla.
Okay.
So every fall you should, accumulating these stocks. And if you have a vision of 21 and 22, FY 21 22,
okay,
then this is the time to have a staggered manner of buying approach.
All right.
So, and the entire thesis is that domestic business will, offset most of the losses from US businesses which these pharma companies are having. So, like Cipla has a good presence in domestic market.
Sure.
It can be a better bet than Lupin or the likes.
Okay, fair enough. Some comprehensive way forward as far as Dharmesh is concerned. Foram, where do you stand here? Firstly, how would you see both these companies in terms of prospects for the future, and which one would you like over the other?
So I would want to choose Cipla over Lupin because if we see, I think the management of Cipla had not guided for good set of earnings, in H2.
Yeah.
And then I think the numbers that we have seen in second quarter itself is very surprising and it's on a good side. So taking that into consideration, and we see it's very clean right from top line. We are seeing a growth in the company and supported by margins increment, expansion. So I think now the risk reward ratio is also very favorable because the stock is taken quite a lot of hitting, on the negative commentary of the management. So now I think the stock will find its support somewhere here and we can buy or do fresh entry in Cipla. But overall, if we see the entire pharma pack, they have always been grappled by unforeseen US FDA issues.
Sure.
So that is why the pharma sector has been divided into the, MNC pharmas and the domestic pharmas.
Right.
And that is why we are seeing that MNC pharmas do not have much of this US FDA issues, problem, because most of their companies are very clean and very, corporate governance and all. So that is why we are seeing the MNC pharmas have shortened up really well. And in terms of pharma, people are comfortable parking their money in the MNC pharmas rather than the Indian ones.
Right.
And for the likes of Glenmark, we see Aurobindo Pharma, all these kind of unforeseen, and sudden US FDA observations that we are seeing. So there's always a risk, and one observation itself, the stock really takes a strong beating. So I think the fact that amongst the entire pharma space, if I want to go, I would still continue to go with Merck, which was earlier known, and now Procter & Gamble Health, and AstraZeneca, because if we see both these companies are US MNC pharma, and they both are enjoying their leadership position in their products since a very long time.
Right.
So apart from earnings improvement, also we are seeing good leadership hold of their products, which is very important. So I think amongst the entire pharma pack, I would be bullish on these two stocks. And if given to choose between Cipla and Lupin, I would want to skew towards Cipla because Lupin, of course, is not given good set of numbers, and the overhang of observation still remains.
All right. So here's the thing, from what I gather from our experts right now, is that between, if given a choice between Cipla and Lupin, both our experts would choose Cipla over Lupin. However, Dharmesh is of the opinion that while they remain accumulate as a house, it should be done in a staggered manner, and you should have a horizon of at least 2 to 3 years going forward. Only then will you be able to enjoy some sort of decent returns. And of course, Foram is of the opinion that while these companies are here to stay, she prefers well, some of these companies which are MNCs, and because they have better governance better governance practices overall, and of course there are several other advantages playing in favor of MNCs, not as much for the some of these domestic names, but Cipla or Lupin.
Just to add a point here, like even Foram is focusing on MNCs which have a business in India.
Sure.
So it's Indian business which will be driving the pharmaceutical space going forward, rather than overseas businesses. So this Merck and everything, they are getting the revenue from the Indian businesses.
Right.
That's the point in context.
All right. So that's the point that we are trying to make. And there you have it. So that's how you would want to ideally go about you have the pharma sector. And from there on, we move on to Titan. Well, this is something that I have been grappling with myself. I tracked this company very closely, and we've had price targets of Titan at 1,600 on the upper end, and is as low as around 1,000 rupees on the lower end. The real question is, what do you do with Titan? Yesterday we saw that sharp knock come in, and this is largely on account of the fact that the management cut its second half guidance to around 11 to 13%, which means an overall growth of just around 10% for the jewelry business. Where do we go from here? Dharmesh, we know that this is a relatively overpriced company even at these levels. How would you address this one?
As far as scarcity premium is concerned, that is the reason why Titan is trading at such valuations.
Sure.
Though it always enjoyed a premium valuation, but with the events happening like PC Jewelers and the likes, so you don't have any listed play to play it out.
Right.
So the GST thing and unorganized to organized, I think all this has been settled for Titan as of now. Management has guided for lower guidance, and see, when the world economy is in problem, gold prices will go up.
Right, absolutely.
And retail investors always buy gold even as an investment when they are low.
Right.
So that has hit their jewelry business, and most of the jewelry is just for accumulation rather than use for on a daily purpose.
Right.
So I do think this problem will persist for Titan. And it has already taken a good knock from the top. So last time when I was there in the show, I have cited that one should be selling Titan. From here on, I don't think there would be any price appreciation happening in Titan.
Right.
It will be more of a time-bound kind of a correction because you don't have other choices. As a portfolio manager, if you are holding and if you are mandated to buy into this segment, you have no choice but to keep Titan. Like the problem is with Maruti, you have to keep Maruti in the basket. So that will give it a floor.
Sure.
So no fresh buying. And if you are holding, I would rather suggest to switch to other cyclicals where you can have a better return.
Okay. All right. Foram, where do you stand on this issue?
So I would recommend a sell, complete avoid on Titan, because if we see earlier, I think during Q1 earnings, or rather even in Q4, the management had guided for good 2020, though they had a 20% run rate, but then they had a little lower guidance from Q4 itself. But then we had given them a thumbs up because that was still ahead of the industry. But post that, I think gold prices have taken, it's shortened up quite a lot, and it's almost like 40,000 per 10 grams now. But if we see historically also, gold has always been rising. From 3,000, we have seen it rising to 30,000.
Right.
And despite this kind of a good up move, Titan was still able to survive the higher prices. But somehow I feel there is a change in lifestyle now, and people do not prefer, the youth do not prefer buying jewelries, rather they prefer traveling over buying a jewelry. So I think there is a change in lifestyle which would not let Titan now enjoy the kind of run rate that it was enjoying in its premium or the major segment, which is the jewelry one, which consists the larger pie of the total revenue. So now when that bigger business is not able to survive, and it's now having a mediocre growth of just 11 to 13%, giving a valuation of as high as 75 to 80 times of P, doesn't suit for Titan now.
Absolutely, sure.
So that premiumness has to now correct, and it will undergo a steep discount of 10-15% from here on. So of course its eyewear business and other watches are doing good, but since the major pie of the segment revenue is not doing good, hence it does not qualify for the premium valuations, and that is why the stock will now see correction.
Okay, fair enough. Unfortunately, guys, we have run out of time on this show, so we're going to have to wrap on this one. On that note, I'm going to thank both our experts for joining in and giving us that take on some 4 very important stocks in this case. But don't go anywhere. Up next is Ask BQ. Stay tuned and we'll keep getting you more.